Hey guys, good morning. Hope everyone is well. Hope that everyone had a great weekend, a great beginning of the week. I'm just going to basically shoot that quick video. That's my second video on TradingView, and I think it's one of the best ways to share ideas and to update any ideas. So last video that I did was a little bit on the long side, about 19-20 minutes. I'd like to basically do a quicker version of it and an update of that. If you haven't seen that video, I think you should have a look at it. And this one is going to be a kind of a funny video because it reminds you of the market as always the upper end. The market is always right, and no matter what we can think, no matter what we can do, you know, we'll have to adapt or we'll die. That's simply as that, and we die not in the physical sense of the thing, but in the financial side of the things. And the reason why I was telling you this is that if you haven't seen last video, as a quick summary, basically, I was analyzing, and this picture that I'm sharing you right now of the daily picture of the Bitcoin is exactly basically the way it stood on the 30th of September. My idea was that I felt that I didn't see the volume, I didn't see the open interest uh, involvement on the futures exchange. I didn't see um, signs that were telling me that we're ready to basically have this big jump. And as a matter of fact, for me, this big area, this big red box as you see, was the big resistance area that would be difficult to get through. I was basically on the side of those thinking that we're going to evolve in that sort of range between these two boxes, the upper level of that was around 40,000 all the way to 45,000. Okay, but definitely I was not calling to be a short. I know that we have to side and you have to choose basically what side of the market you are when you do these videos on TradingView, and you have to basically decide neutral, short, or long. I hesitated, as a matter of fact, I hesitated when I shot that first video to choose neutral because my view was more neutral, if anything, like slightly bearish. And like I said, I was waiting to get hit on some of my beats that I was working all around this green area below of the Bitcoin. Okay. That was my trading plan. My plan was not to get short the market or to get even less to get short the Bitcoin. My plan was wait that the market settles down and maybe start retracing even like below that low that we established around 39,500 and start basically hitting some of my beats. Not in the Bitcoins, but like I said, I don't really trade the Bitcoins. I mean, for me, there's about plenty of other altcoins or Ethereum if you want like some of the big to stay in the big major caps to get involved in the crypto markets. But these levels that I will work off the Bitcoin or the Ethereum off the major caps will help me to locate myself and to say, okay, I want to basically be long that altcoin, whatever project that that yourself you think that, you dim is worth looking at. I'll tell you, for instance, on my hot list right now, these are sort of names that I'm looking at. They're ranked alphabetically, so you can see, and I'm sure you'll be able to pause and look at some of this project. But for my own reasons, these are sort of projects that I look at, and these are the some of the projects that I will basically start getting involved when get long again or short. But I haven't been shorting the market in a very, very long time. I play on the long side mostly, and I wait basically some levels to hit my levels on the Bitcoin or Ethereum in order to basically get and partake in the action. So that's the way that I left the video on September 30th, if you remember. And if you haven't seen, then that's the summary. I was kind of like basically waiting, that range, and then probably to make a new low below 39,500 and start basically seeing some acceleration of sellers. And then I would basically get some of my bits filled lower, which obviously didn't happen because this is the development of the market since that day, the big day that we had on Friday. And that's basically the day where I started changing my um, changing side and looking at some of the market momentum. I'm a momentum trader, and that's what I want to trade. The moment that basically we started trading in that area. I was still definitely a bit cautious, not basically loading my guns and going crazy, 100% long, but definitely basically putting back some of my chips in the market in some of the projects that I liked. Um, the project that I traded that I liked personally was AXS. Uh, Solana that I really like, Luna, and these are basically the three main ones. I've traded some others around that, but these are the three main ones that I, you know, got back into on Friday on that big green candle on that big momentum. If you look back on some of the lower time frames, the 4 hours, the 75 minutes, definitely you could see the volume coming back on Friday morning, and that was a signal that probably the weekend would be um, would be very active and on the upside. And now since then, you see we've basically gone over my big red box, the big resistance area, and especially above that level that I was telling you about, around about 48,000. And what I also like is that it's certainly something that probably I've missed on my analysis on Thursday was the fact that I don't know why on some of my other charts usually I'm looking at my force index, which is a 2 or 3 days, depending on if I'm looking stocks or crypto. Usually crypto I would take a force index um, 3 days. On stocks, I will use 2 days, but whatever, it should basically make a huge difference. But for some reason, I must have had like a left, like an old settings on maybe based on my weeklies on the 13th, and I didn't see that divergence I was really drawing up very clearly, and you can see that we had the massive bull divergence I was setting up with lower lows on the price of the Bitcoin, but at the same time, we can basically make that on the force index, which is one of the index that I really like to and I really appreciate to look at because for me it really mixes up the most important information that you get about the market, which is price and volume. These are the two major essential elements that you need into your technical analysis. I could probably get rid of all these drawings and all these box and all these fibos and all this moving average that I'm using in my analysis. But definitely, if you were to stick to only price and volume, these two elements only, they're the most important in valuing your next move in the markets. And I kind of like miss that because these force index 3 days and crypto also 2 days definitely gives you a better picture for swing trades that will last about a week or so. And because I was using the 13 days, it did not appear as clearly as it did on the 3 days. So the fact that we've seen that, also I want to show you something. That's the Binance Bitcoin futures open interest. So for those who are not familiar with open interest, basically every time that someone gets involved in futures, opens a long or a short position, in front of it, there will be basically a buyer for every short seller and vice versa. But every time a contract is created, a futures contract is created, and that creates a contract opening in the open interest. So when you have the price basically going up like you see it and the open interest that basically goes up, that means that's creation of contract, and that's the sort of sign that of a good and healthy market you're seeing. You see that that was basically the correction that we start seeing on September 7. That was, I think, the third or the fourth biggest correction that we'd seen in open interest futures this year, and also in terms of price correction. And since then, we had a massive correction in the open interest. Again, I'm looking at Binance only, but given the fact that Binance owns, I want to show you that they own about basically 23% of the overall market of the biggest exchange in terms of open interest. So, it is the biggest market, still be the biggest futures market, still the biggest spot market. So the picture that you will see in Binance is pretty much, reflected in other exchanges. Uh, but it's clearer to see on Binance. Since we had the yellow price, the yellow curve here is the price, the closing price of Bitcoin, and the black one is the open interest. And you see, since we kind of stabilized around the lows around the 42,000, and then we started, we had this tab at around 41,000. The On September 30th, nothing had really been happening in the open interest. It had started going back up, probably on the back of more futures, short positions, being more aggressive. But definitely, since the market has started rallying back from that base of 41, 42,000, you see that there's been a huge increase in open interest. We went from 2.8 billion dollars of nominal futures contracts to now 3.8, so almost $1 billion of nominal contracts only on Binance, and along with that, basically good increase in the market. So that's pretty. That's a good sign. That's a very safe sign to see the increase of open interest. It is that means that the institutional retail as well, but the institutional is back in the market. Maybe they were waiting like myself, to get a last dip to be getting involved. But we never got that, and the big whales probably decided to go back now and start buying again, and that's a good sign. That's a pretty good sign that we're seeing. So back to the daily. Right now looking at the dailies, we've maintained EMA 7. We even basically took a stab yesterday on the way down and then jumped back up. And probably they're going to try to push it. And the next big level is going to be all around this $53,000. At which point, if I was long Bitcoin or any other coin, I would start reducing some of the long positions and wait to see how the market's going to react. So that's it. That was a little update on my last video. It's again, I'm kind of laughing because it's the first video that I was doing on TradingView. Obviously, I was neutral to bearish, waiting for the market to come to me and start basically getting some cheap levels on some of the coins that I was working below the market. This never happened, but it shows you, and that's really the conclusion and the point that I want to reiterate. The market is king. The market decides. The market is never wrong. If anybody is wrong, it is you, it is me, it is us, the traders, and we have to adapt and we have to react. The same way that we take a position, we have to have some invalidation points at which we say, we're on the wrong side of the market. As a matter of fact, you will know that you're on the wrong side of the market immediately. If the price at which you bought or at which you shorted is basically either above or below that level, then that's means you're wrong. If you're losing money, that means you're on the wrong side of the market. Obviously, you have to give yourself some flex. You have to give yourself some leeway to manage your position. But don't ever forget that once the price goes against you, once your position is basically giving you a negative P&L, that means that the market is going against you. You're in the wrong. I mean, you might be in the wrong for only maybe a few hours, maybe one day, but as long as you got the invalidation exit strategy and you know that you got to get out because according to your risk management, according to your money management, then you're fine. You'll be absolutely fine. But at the same time, you need to have an invalidation entry strategy that basically goes against your trading plan. If that hasn't happened, then what's the alternative? And that for me, that break above this confluence of big EMAs, that break above that level, that entering of the red box was for me a signal to start basically getting back in. Again, not really like medium term, it was like more of a short term trading strategies, meaning 2, 3 to 5 days, maybe a week, that sort of type of swing. Okay. I'm not talking about short term intraday, but like, that sort of like 3 to 7 days type of trading windows. And you need to basically be reactive. You can't basically saying that's my analysis and that's the way I'm going to live it. No, the market basically doesn't wait for you. The train doesn't wait for you, and that's it. That's simply it. So guys, I hope you had a good weekend and a good in terms of trading, in terms of everything, and a good beginning of the week. Let's see if this market still got some momentum to basically reach up to that level around the 53,000 of the Bitcoin. And I see that there's some gas. I see that there's some healthy signs in the open interest of the futures. And generally speaking, we'll have to wait. But that's the right side of the market to be right now. Any comments, please don't hesitate. Any likes, it will kind of like help me to know what you guys are looking at, what you think about the overall market, and it will definitely push me to update these sort of trades of technical analysis more often. See you guys. Take care and happy trading.